Well, I have a question about 401k for retirement.
Mm-hmm.
I saw a documentary on PBS, and it kind of showed some pretty compelling evidence that investing for retirement in 401ks, because of all the fees that are associated with it, that over like 50 years, it can erode, those fees can erode like 2/3 of your original investment. And they strongly advised the advantages of being in something called a market index fund versus mutual fund. So I guess my question is twofold. Exactly what is a market index fund, and what's your opinion on which one I should be in for retirement?
Okay. A market index, an index is anything that models, an index fund is anything that models one of the particular indexes. Best way to do it is give you an example. The S&P 500 is an index. The Dow Jones Industrial Average that quotes what the stock market's done today on the news is an index. The best example is the S&P 500, and what that is Standard & Poor is a company, S&P, that does all kinds of ratings and research on the stock market, and they have rated the top 500 companies in size on the New York Stock Exchange, which are the largest companies, in other words, the largest publicly traded companies in America. So those 500 companies, what their stock does really does represent in a very real way what the stock market is doing. That's an index fund, okay? You could get an index fund that is trying to measure or mirror some of the international markets or some of the small cap stocks like on the Chicago exchange. But the most commonly known one that they would be referring to in that would be something like an S&P 500. Now, so if those 500 stocks are the index, if you want to index to them, rather, they're the measuring stick. What we're trying to do if we're creating an S&P 500 index fund is we're trying to create a fund that mirrors what those stocks do as a group. It may or may not hold all 500 of them, but they're doing their very, very best to do exactly what that index does with that mutual fund, okay? So an S&P 500 fund is really going to give you pretty close to the exact rate of return that the stock market gives you. Not any better, not any worse. As a matter of fact, it's considered the baseline when you measure against it to see if another type of mutual fund is outperforming the market. You see what I'm saying?